Hello everyone, welcome to EduTap and welcome to the complete revision session for the RBI Annual Report 2023-24. So as you know that the RBI Annual Report is very important for the RBI Grade B examination, let it be the objective questions or let it be in the descriptive part of the examination. The annual report is very important for the phase 2 previous year, for the phase 1 previous year. In both the phases, the questions have been seen directly from the annual report. So annual report is very important from the examination perspective, and that's why I have taken a complete session on the RBI annual report. I hope you have already seen this session and then you have come to the revision session. Okay, so we have discussed the pointers from the descriptive point of view in this video as well as from the objective point of view in this video. So I tried to cover the complete annual report in the most comprehensive way as well as in the detail. I tried to cover the annual report here, and we had discussed the pointers from the descriptive point of view and the objective point of view, and this session is very important. I hope you have already seen this session and then you have come to the complete revision session. So in today's session, we will practice the MCQs from the annual report, that what kind of questions can come from the annual report as well as what are the important data points. So we will also understand that what are the important data points that you need to remember from the annual report, as well as I have brought you some excerpt. So through that I will try to show you that how you can use this annual report for your answer writing practice also, okay, for your answer writing also. So this is the complete revision that we will have, the MCQs, the data points as well as the descriptive. I will try to touch the descriptive part also, but Jaskaran sir will take a separate session for the descriptive. Okay, but I hope you have seen this session because this was the most detailed session that you can find, and this is the complete annual report that we have discussed. Now let's move forward with the MCQs. Let's see that how much you remember from the annual report. Okay, so before that, do subscribe to the YouTube channel as well as join the Telegram channel for the PDF of the session. So you will get the PDF of the session in the Telegram channel, okay, and the Telegram channel link is provided in the description box below. So let's start with the first question. I hope you all are ready, and good morning to all of you. So this is the first question. Try to answer this question, a very easy question in the start. So let's see how many of you are able to solve this question. Okay, so starting with the global inflation. So the Reserve Bank of India has given the assessment and the prospects of the global economy as well as the domestic economy. So in terms of global inflation, that has fallen down to the 6.8% from the 8.7%. Okay, so what is going to happen in the future? That means what is the expected inflation rate for the future for the global economy? So I'm getting the answer D. So let's see, is it correct? So here the global inflation is projected to moderate from 6.8% in 2023 to 5.9% in 2024 and 4.5% in 2025. So this is absolutely correct. All the people that have given the D as the right answer, so that is correct. So this is the important data points that you have to remember, the projections, the assessment as well as the projections you have to remember from the exam point of view. Now coming to the next question. So this is the kind of questions that the RBI has started asking in the phase 1 also, as well as RBI asks these questions in the phase 2 also. So let's see that how many of you are able to solve this question. So simply, the Reserve Bank of India released its annual report, and as per the prospects and the assessment of the global economy, which of the following statement is correct, that you have to tell me. So according to the IMF World Economic Outlook 2024-20, the global growth accelerated to decelerated. It has decelerated to 3.2% during the 2023 from the 3.5%. So the growth of the world economy was happening by 3.5% during the 2022. That has come down to 3.2% in the that has come down to 3.2% in the 2023. So I hope you understand that this is wrong. Global merchandise trade volume has contracted, has decreased by 1.2% in 2023 in contrast to an increase of 3% in the previous year, as the demand is rotating back towards the services. Okay, so this is correct. This is correct. The second statement is actually correct. The third statement is global trade volume, goods and services is expected to recover with a growth of 3% in the 2024 and 3.3% in 2025 from the 0.3% in 2023. So this is also correct. So second and third statements are correct and you had to find the correct statements. That's why the correct answer is C. Very good. Everyone has given the right answer. So the C is the right answer here. Now I want to tell you one thing. That okay, this is important, the data points, that what is the projections, what is the outlook for the global economy, and here the data points are important such as the global merchandise trade volume as well as the global trade volume in total. Now one mistake that I did in my previous session, that was that global merchandise trade volume contracted by 1.2% means that, remember that the trade volume, the global merchandise trade has decreased actually by 1.2% as against the increase of 3.0% in the previous year. So the goods trade actually decreased, contracted by, so I read it wrong and that's why the confusion was created. So the trade volume contracted by, that means the trade volume in the merchandise, the goods trade at the global level decreased by 1.2% as against the increase in the by the 3% in the previous year, and that's why the demand has rotated towards the services. As you can see that the services in 2023, the services increased by 0.3%. So remember that the global goods trade, the global merchandise trade decreased by 1.2% in 2023 as against the increase of the global merchandise trade in 2022, while in 2023 the demand rotated towards the services sector. So if the global merchandise trade is decreasing by 1.2%, the services trade was increasing by 0.3%, which is expected to increase by 3% in 2024 and 3.3% in 2025. I hope this is very much clear that the global goods trade contracted by 1.2% means decreased by 1.2% as against the increase of 3.0% in the preceding year. So in 2023, the global merchandise trade has decreased by 1.2%, while the services trade in 2023 has increased by 0.3%. Okay. In India also, the merchandise trade has decreased as the exports have decreased by 3.1% and the imports have decreased by 5.7%, while the services sector still grew at the exports. The growth of the exports was still present in the services sector, that is by 5.5%. It was lower, the growth in the services sector was lower, but it was still happening. So now coming to the third question. So I hope first and second questions are clear. Now coming to the third question. So try to answer this question, okay? As per the recently released RBI annual report for the financial year 23-24, headline inflation in India has softened to what percentage? Here we are talking about the domestic prices. So headline inflation softened to what percentage during the 2023-24 from the 6.7% in the previous year? So it is, yes, very good. It is 5.4%. So headline inflation, the retail inflation, the CPI inflation index, that has softened to, that has decreased to 5.4% in 2023-24 as against the 6.7% in 2022-23. Okay, so this is the idea. So this is the percentage that is important that you have to remember. So headline inflation, this data point you have to remember. The core inflation, this data point also you have to remember. The food inflation, just the basic point that the food inflation has increased from the 6.7% to 7.0%. So these are the data points, the three data points that are important here. This gross fixed capital formation and the private consumption demand, these are from the second advanced estimates, for which the update has been given by the NSO in the form of provisional estimates. Okay, so these have been updated, but basically the gross fixed capital formation has increased by 10.2% in the 2023-24 as compared to 6.6% in the previous year, and the private consumption demand has increased. The private consumption demand has increased, but it has only increased by 3% as against 6.8% in the previous year. So I hope this is clear, and these are the important data points. Now going forward coming to the next question, I hope you will be easily able to answer this question. Okay, so try to see and try to tell me that what is the incorrect, what is or are the incorrect statements here. So try to answer this. Let's see how many of you are able to answer this. So inflation in food and beverages remained the major driver of headline inflation. So that is correct. And the headline inflation, the contribution of food inflation in the headline inflation increased to 60.3% during 2023-24. So yes, food inflation had the major contribution in the headline inflation, and the contribution of food inflation increased to 60.3% as compared to 46%. Okay, the INR depreciated by 1.4%. 1.4%. Okay, during the 2023-24 as compared to 7.8% in the previous year. 2023-24 total digital payments recorded growth of 44.3% in terms of volume. So volume is always greater, and in terms of value the growth is 16.4%. so that is also correct. See, this is more important from the descriptive point of view. You can use these data points in your descriptive like during the descriptive writing. Okay, so the first statement is correct, third statement is correct, only the second statement is wrong, and here you have to find the incorrect statement. So the D is the right answer because only the second statement is wrong. Understood? So yes, so everyone has given the right answer. That is good to see. So 60.3% of the contribution is from the food and beverages in the inflation rate in 2023-24. Okay, so this is the data point that is important, especially this is important from the descriptive answer writing point of view. Okay, the INR has depreciated by 1.4%, and so this is important. This is, you can use this data point of domestic equity market in the descriptive answer writing. If you want to understand everything, I hope you have already seen the complete session. This is only revision session. So I am only helping you by telling you the important data points. I cannot explain everything again because I have already taken a long session for the explanation part. Okay, so this is revision. Just try to solve the questions and just try to see that which data points are important, and first see the full session, then come to the revision session. Okay, in 2023-24 merchandise exports contracted by 5.7%. so here you have to tell that in regards to the current account transactions. So as we have discussed that in the previous session, that what are the current account transactions, and in regards to the current account transactions you have to tell that which of the following statement is correct. Current plus capital, sorry, here it should be current plus capital account transaction. So as per the current plus capital account transactions, you have to tell that which of the following statement is correct. Okay, so in 2023-24 the merchandise exports contracted by 5.7%. so no, the merchandise exports have contracted by 3.1%, while the imports have contracted by 5.7%. So the exports have contracted by lesser percentage as compared to the contraction in the imports, that is by a higher percentage. With robust services exports and a steady flow of inward remittances, the current account deficit has moderated to 1.2% of the GDP. So the current account deficit has decreased to 1.2% of the GDP as compared to 2.6% of the GDP in the April to December period that we compare. Okay, net foreign portfolio investment flows recorded a significant turnaround to US dollar 41.6 billion. So this is correct. Okay, that FPI turnaround is quite high. The FPI, that is net FPI that is flowing into our country, is quite high. So in regards to the current account and capital account, the first statement is wrong, the second statement is also wrong, only the third statement is correct. Okay, and that you can say that in the current account regards, the first and second statements both are incorrect. So here the right answer is A, because the first and second statements are not correct. Okay, what is capital account, what is current account deficit, what is current account, what is capital account, all has been explained to you in the complete session. Okay, so India's merchandise exports fell in 2023-24. So you just need to know that there is the fall that has come in the exports and the imports. Even if you do not remember the data points, that is fine, but for the answer writing you can remember this much only. Okay, so now what is the current account deficit? So that you need to know, because this has been mentioned again and again by the RBI in different articles. Okay, so this is important. Okay, merchandise trade deficit, the numbers you do not have to remember. Okay, the numbers is not compulsory for you to remember here. So net portfolio investment, just here the number is important because it is talking about that since 2014-2015 there is the second highest of the net FPI that we have achieved. So this number becomes important, right? So this you have to remember. Gross foreign direct investment. So you do not have to remember the flows that has happened, just remember that what is the difference. So here I have told you that what are the important data points that you have to remember. Okay. So again, this is also not very important. The data points here are not very important. Okay. Next is coming to next question, that is, as per the RBI annual report, which of the following statements are correct in regards to the prospects of the domestic economy? So you have to tell that which of the following statements are correct. Okay. Let's see how many of you are able to give the right answer. Okay, I am getting the answer D. Okay, let's see. CPI inflation for 2024-25 is projected at 4.5%. The digitalization of the tax system has enhanced the tax collection, with the centre's direct tax revenues budgeted to reach 6.7% of the GDP in 2024-25, the highest in 3 decades. India's share in the world remittance receipts is estimated to increase to 15.2%. So this is also important. The centre government extended the financial assistance scheme for the state's capital expenditure. So capital expenditure should always be the focus point, with an outlay of rupees 1.3 lakh crore. So this is also correct. So the third and fourth statements are correct, and that's why D is the right answer. The first and second statements are incorrect. So see, I remember most of the data, especially when I see the options, I am able to tell that what is correct, what is wrong. Why? Because I have read the annual report, then I made the complete, like I was making the PPT. So that is the one time I am reading, one time I am revising kind of thing. Then when I was coming for the session, I revised it again. Then when I was making this PPT, I tried to inculcate all the data points. So in the 4 times of revision, I nearly know all the data points by heart. And literally, if you just do the 3-4 times of revision, you will have the data points by heart. And I have not gone and did the ratification. No, I just try to understand. I just try to bring the questions for you. I have not done the ratification that, okay, this is this point. So that is what I am telling you, that do the 3-4 times of revision. Right now, it might seem that the data points are too much. But once you go through the same report or the same PPT or the PDF 1 or 2 times, after that you will start having the points in your mind that, okay, the remittances increased to, it is expected that the remittances will increase to 15.2% and such and such. So here all the data points are important till here. The gross market borrowings, the net market borrowings. So this is not the data point that you need to remember. Here just the difference between the gross market borrowings and the net market borrowings is important. As I've told you in the session, in the complete session, that the gross market borrowings means what? Gross market borrowings means that total borrowing that has happened in the year, in 1 year by the government. So total borrowings that has been done by the government in a year, that will be used for its own expenditure. That is, that the government will use for the expenditure purposes, plus the repayment of loans. Okay, so net market borrowings is actually the borrowings that the government has done in a financial year, which is going to be used for the expenditure purposes and not for the repayment purposes. So this difference is important, and just the percentages you can see that the gross market borrowing is going to increase to 4.3% of the GDP, and the net market borrowings is going to increase to 4.40%, is going to increase to 3.6% of the GDP from the 4.0% of the GDP. The data points in the crores you do not have to remember here. Okay. Now moving forward, very easy question. Headline inflation softened to 5.4% in India during 2023-24 from the 6.7%. So the core inflation has fallen by what percentage? From 6.1% in the previous financial year. So the core inflation has fallen by what percentage? That is 4.3%, right? So the core inflation has fallen by 4.3% from the 6.1% in the 2023-24 financial year. So this is the idea. Okay, so this is very important. The core inflation, the headline inflation, the food inflation, they are important. Now coming to directly, you can see this line and see the private sector banks, the public sector banks, their data points is not very important. But when it comes to the whole of the scheduled commercial banks, then the data points become important. So if you ask me that how much is the credit growth of the scheduled commercial banks, I might not be able to tell you the answer. But once I see the options, I directly know that 16.3% is the answer. So that is the point, that you have to train your subconscious mind that what can be the percentages, right? And once you go through the same PPT, once you go through the same file again and again, like 2-3 times, you will get to this point that you remember the data points by heart. Okay, and that is what you need to have. So the private sector banks growth has accelerated to 19.2%. So and that of PSBs has increased to 14.7%. So just you need to remember that the private sector banks credit growth is higher as compared to the public sector banks. Okay, so here you can see that the 2023-24, so for the scheduled commercial banks, the growth is 16.3% of the credit growth. For the private sector banks, the private sector banks are having the higher growth, the public sector banks are having the lower growth. Try to picture this diagram in your head. Try to keep this diagram in your head. Okay, now these data points are not very important, just you have to remember that the M3 has recorded a growth of 11.2%. So M3, that is the money supply, that RBI uses. So the M3 recorded a growth of 11.2% as on March 22, 2024. Okay, so this is important. Next, the RBI's balance sheet size has increased to 24.1% of the GDP at the end of March 2024. So these two data points that you can remember. Now coming to the next question, so here you have to tell that as per the fiscal consolidation commitment of the government, that government wants to reduce its fiscal deficit, government wants to reduce the borrowings that it is taking. So as per the fiscal consolidation commitments, which of the following statement is or are correct? So that you have to tell me. So gross fiscal deficit declined to 5.9% of GDP in 2023-24 from 6.4% of the GDP in 2022-23. So this seems correct. Revenue spending growth was contained at 2.5% while capital expenditure grew in double digits for the fourth consecutive year. So this is also correct. The fiscal adjustment was also supported by buoyant revenues. Gross tax revenues have increased. Gross tax revenues. Here, yes, here it is not talking about the direct tax revenues or indirect tax revenues. So when you add the direct tax revenues and the indirect tax revenues, and you see that in gross, in total, what is the increase in the tax revenues, then the increase is 11.7%. So this is the idea that here only the third statement is wrong, and that's why the answer is E only. The answer is E only. So here you can see this diagram, you can remember that in total, if we talk about the gross tax revenue, that has grown to 11.7% of the GDP as compared to the direct tax revenue, it has become 6.7% of the GDP. It will become 6.7% of the GDP in 2024-25. So this is the idea. Okay, this is the complete idea. And here you can see the data points that gross tax revenues increased to 11.7% of the GDP in 2023-24. As compared to that, the here all the data points are mentioned. So you can read it out. Okay, and this is the basic idea that has been provided to you. So now moving forward to the next slide, as per the state finances data released in the RBI annual report, states budgeted a combined gross fiscal deficit of the states as a percentage of GDP in the 2023-24 within the center's limit of 3.5%. Okay, so this is for the 2023-24, the budget estimates. As per that, the gross fiscal deficit was what percentage of the GDP? As compared to this, if we talk about the percentage of GSDP for the 2024-25, so gross fiscal deficit is expected to be or is budgeted, the budget estimates will be what? So it is 3.1%. Okay, so 3.1% of the GDP as per the 2023-24 budget estimates. Don't we want to lower it? The gross state domestic product as a percentage of gross state domestic product. So 2024-25 we are talking about. 2024-25. Should it be A? So Mini is saying D. And Superva is saying D. All the other students are saying A. So let's see the answer. So the answer is D only, because 3.1 percentage, 3.0 percentage. So let's see here. If we talk about the percent of GDP, so gross fiscal deficit was a percentage of GDP, that was 3.1% of GDP in 2023-24 as per the budget estimates. When we talk about the percentage of gross state domestic product, so that is GSDP, percentage of GSDP. So 3.3% is for the 2023-24 revised estimates. If we talk about the budget estimates of 2024-25, so it is the 3% of the GSDP. So that's why the D is the right answer here. The D is the right answer here, because we are talking about the 2024-25 here. Okay, so that is the idea. 2024-25 budget estimates when we are talking about. So here it is 3% of the GSDP. So next is try to answer this question. So try to answer this question. Inward remittances of India stood at this much. You just have to tell me that according to the World Bank, the India's inward remittances are estimated at $135 billion in 2024 with a share of what percentage? So 15.2%. This is the important data point that you have to remember. Okay, so very easy. So here just the shares you have to remember. So that is as well as the total amount here, that also you can remember, but the shares are most important. Okay, coming to the next slide, that is the net FDI. So as per the international flows, the data point related to the international flows, you have to tell that which of the following statement is correct, is or are correct. Okay, so net FDI flows fell to 10.6 billion during the 2023-24. Okay, outward FDI from India increased by 13.9% during the 2023-24 on a year-on-year basis. So that is also correct, that the outward FDI that is going out of the country, so that has increased by 13.9% from $14 billion to $16 billion, we can say. Okay, so Singapore, the US, the UAE, the UK and the Netherlands were the major destinations. So this is also correct for the FDI. For the FDI, that for the outward FDI, these are the major destinations. Okay, next is during 2023-24, the top FDI sources, countries that from where the money has come to us, from where the FDI has come to us. So that is countries were Singapore, Mauritius, the US, Netherlands, Japan, contributing 73.9%. So these were the major contributors of the FDI in our country. So here only the second and third statements are correct, and that's why the answer is D here. Okay. The fourth statement is incorrect. You have to find the correct statement. So first and fourth statements are incorrect. Here the percentage is wrong. Here also the percentage is wrong. So only the second and third are correct, and that's why D is the right answer here. Okay. So here again only the data points that you need to remember is the complete data points. Okay. This is not very important. The outward FDI, from where it came, what is the increase in the outward FDI from 14%, from $14 billion to $16 billion. If you see, this is the increase of 13.9%. So you can calculate also. I actually calculated it to see that it is actually the 13.9% or not, and I got to the correct answer. So 13.9% is the increase in the FDI from $14 billion in the previous year to $16 billion in the financial year that we are considering current, that is 2023-24. Okay, so this is the right answer, and this is also important. So now the external commercial borrowings flows exhibited a turnaround. That means before we were lending more to the other countries, now we are borrowing more from the other countries. That is why there is the 3.5 billion of net inflow that has happened in this financial year of 2023-24. Okay, so this is important. Now coming to the next question, that is the incremental cash reserve ratio. So in the previous session, I have explained you completely that why the Reserve Bank of India used the incremental cash reserve ratio to decrease the extended money supply to the banks. So suddenly there was huge increase in the money supply with the banks because of the withdrawal of rupees 2000. So now the RBI had to take this extra money supply from the banks. So the RBI implemented the incremental cash reserve ratio. So that is by 10%. That is by 10%. So that is very easy. Everyone has given the right answer. So this is one point that you have to remember. Now the external benchmark based loan rate. So I have given you the information regarding this. The percentages here are important. So at least see that how much is the increase in the external benchmark based loan rate. Okay. Now coming to the next question, that is in regards to the credit delivery. So in regards to the credit delivery, which of the data points are incorrect, that you have to tell me. Okay. So the number of operative KCC cards rose by 5.4%. That is correct. If we are talking about the number of operative Kisan credit cards, so that have increased by 5.4%, and the outstanding loans have increased, or the outstanding amount has increased by 10.9%. So absolutely correct. On a year-on-year basis, the outstanding credit to the MSMEs by scheduled commercial banks expanded by 20.9%. So this is wrong. As well as the scheduled commercial banks in the 2023-24 provided nearly 45% of the A and BC under the priority sector lending. So these both statements are incorrect. That's why C is the right answer here, and I am happy to see that most of you are able to give the right answer of all the questions. So that shows that you have gone through the previous session, and you have remembered the important data points yourself. So here you can see that the KCC cards have increased in number by 5.4% and in the outstanding amount by 10.9%. Here the 45.1% of the A and BC adjusted net bank credit has been lent to the priority sectors. Okay, so this is the point here. Next, coming to the next question, the financial inclusion index. So if you remember that in the NABARD, the previous year the examination happened, and in that directly the financial inclusion index, this came into the descriptive answer writing. Okay, that the financial inclusion, in context of the financial inclusion index, the financial inclusion had to be explained, and the whole financial inclusion index had to be explained. So you must know about that there are three parameters, or there are three components of the financial inclusion index. What is the weightage of these three, and what is the meaning of 0, what is the meaning of 100 in the financial inclusion index? Financial inclusion index, does it have a base? So can you tell me that financial inclusion index, does it have a base or it doesn't have a base? Yes or no? It has a base or it doesn't have a base? So you must have the complete information about the financial inclusion index. Okay, so financial inclusion index comprises of three broad parameters. That is access, that has the weightage of 35%, usage, that has the weightage of 45%, and quality, that has the weightage of 20%. So this is incorrect. The index captures the information and ranges from 0 to 100. So it doesn't have a base. It doesn't have a base, and the financial inclusion index ranges from 0 to 100. 0 means complete financial exclusion. No people has any bank account. No people is integrated with the financial market. So we do not have the complete financial inclusion. Most of us have bank accounts. Most of us are connected with some stockbroker or some financial market intermediary. So that is the idea, that we do not have the complete financial exclusion, and we are not even at the 100, that we do not have the complete financial inclusion. 100 means complete financial inclusion. No, it is also not correct, right? Many people do not have the bank accounts, many people do not have the insurance, many people do not have the connection with the financial market, so we do not have the complete financial inclusion also. So this is the correct statement actually, because this is telling the right information. Now the next point is that the Reserve Bank's financial inclusion index improved from 56.4 in March 2022 to 60.1 in March 2023. So this is actually wrong, because it should be 60.1. Okay, so here only the third statement, only the first and third statements are incorrect, only the second statement is correct. So as I have told you that the first and third statements are incorrect, only the second statement is correct, and that's why the B is the right answer here. Okay. Yes, it is 60.1 and not 65.1. So this is the idea. I hope this is clear, and this is the information that you can read about the financial inclusion index. So this is the complete information about the financial inclusion index. Okay, I didn't want you to go and try to find everything, so I tried to provide you the information that is required. Now coming to the next question. So in case of frauds, so Department of Supervision is the one that releases the data for the fraud analysis. So you have to tell that which of the following statements is or are correct in regards to the fraud analysis. Okay. So here frauds have occurred predominantly in the category of loan portfolio. No. In terms of number, the frauds have happened mainly for the card or internet, that is for the digital payments. In terms of value, the frauds have been reported primarily in the loan portfolio category, in the advances category. Okay. So this both statements are incorrect. So only the third statement can be correct, because none of the above is not the answer here, right? There was 46.7% decline in the amount involved in the total frauds reported during the financial year 2023-24. So that is correct. 2023-24, there is the 46.7% of the decline in the amount of the frauds. The number of the frauds have increased, but the amount of the frauds have actually decreased. Okay. So this is the idea. The percentages are important here. Now coming to the next slide and the next question. So the value and volume of banknotes in circulation increased by what percentage? So the value has increased by what percentage? The volume has increased by 7.8%. So in the financial year of 23-24, as compared to the previous financial year, the increase that has happened in the value of banknotes in circulation was 3.9%. Very good, 3.9%. So the value of banknotes in circulation has increased by 3.9% and 7.8% in volume. 7.8% in volume. So this is the idea. I hope you remember the data point here. So the value and volume of banknotes is important, especially for the current financial year for which the data has come. Okay. As well as the share of 500 notes is high in both the volume category and value category. Even if you are not able to remember the data point, it is not important here. E-rupee in circulation, remember the number, that is 234.04 crore in value. Only the data point that is important here is this data point. Okay, in percentages, in value, this data point and this data point is important. Next question is that the payment and settlement system recorded a growth of what percentage in terms of transaction volume during 2023-24. So very easy. The payment and settlement system has recorded a growth of 44%. Absolutely correct. So here directly you need to know that the payment and settlement system has recorded a growth of 44% in terms of transaction volume on top of the expansion that has happened in the previous year. In terms of value, the growth was 15.8%. So this is the important data point. For retail transaction, the data point is not as important. For the large value transaction also, the data point is not important. The digital transactions data point we have discussed, as well as this is the data point for the payment and settlement system. So for the complete digital transactions that we have discussed in the starting, and for the payment and settlement system. So for that the data is important. Now coming to the last question. After that we will discuss some of the answer writing points and we will discuss some other points. Okay. ECF, that is requires the contingent risk buffer. So the Reserve Bank of India has to maintain the contingent risk buffer, because the Reserve Bank of India has to handle the monetary pressures, the financial pressure, there is the monetary risk, financial risk, there are the other risks that are present. So RBI has to maintain the contingent risk buffer. To maintain, and this has to be maintained within the range of 5.5% to 6.5%. So recently for the year 2023-24, what is the percentage of CRB? So that is 6.50%. Okay. 6.50% of the contingent risk buffer has to be maintained by the Reserve Bank of India. So these are the data points, and here you can see that the total assets are this much of the Reserve Bank of India in crores. 70,47,703 crores is the total asset, is the size of the balance sheet of the Reserve Bank of India. Income that has been earned by the Reserve Bank of India in 1 year is, in 2023-24, is 2,75,572 crores. The expenditure that the Reserve Bank of India has done is only 64,694 crores. The 5 lakh has been given to the different funds, and after that, whatever is left, that has been given to the, after this, whatever is left, after giving to the funds, whatever is left is given to the government as surplus. Okay, so surplus is very high because of the lower expenditure, because lesser provisions had to be maintained. So I got a question that why lesser provisions had to be maintained. So remember that in 2022-23, so in the financial year that ended on March 31st, 2023, that is the financial year of 2022-23. In this financial year, that is the financial year of 2022-23. In this financial year, what happened that there was very high as compared to the previous year, of 2021-22, as compared to this year in 2022-23, there was very high fluctuations in the foreign securities. That means there was a dip that was coming in the value of the foreign securities in which the Reserve Bank of India has invested. So if we talk about the IRAFS, that is the investment revaluation account foreign securities. So for the revaluation that happened of the investment, so every year the Reserve Bank of India revaluates its investment in the foreign securities, in its investment in the rupee securities also. So the foreign securities were very volatile, due to which there was very high dip that was seen in the value of the foreign securities as compared to the previous year. So the extra provisions had to be maintained for these foreign securities, and that's why the expenditure in the previous year was very high, because of the risk provisions that had to be maintained higher. Okay, in compared to this, and the risk provisions, they accumulate because the foreign securities, they are for the long term. If the RBI has invested, so actually the loss didn't happen and that accumulated. So this much of the risk provisions, they were maintained, but the loss actually didn't happen, so they were accumulated. And if you see in the 2023-24, in this financial year, again the investment revaluation account for the foreign securities, this was this much. Data points you do not have to remember. This is just for your understanding, because many of you were asking that why the risk provisions are very high as compared to the previous year. So in the 2023-24, the foreign securities, they actually did better. That's why the risk reduced. So the risk provisions also had to be maintained less, as well as the previous risk provisions, they accumulate. Okay, so every year whenever there is the this is the CF and ADF. So here you can see, so in the contingent risk buffer or in the available realized equity, so contingent risk buffer has to be maintained 6.5% for the 2023-24. For the financial year 2023-24, the contingent risk buffer or the available realized equity has to be kept at 6.5%. And the capital, the reserve fund, the capital is 5 crores. The reserve fund is 6,500 crores with the RBI. The RBI, this is the risk provisions that the RBI maintain. So this is the contingent fund and this is the asset development fund. So contingent fund is for the risk that has to be, like the risk buffers, we can say, the risk that has to be reduced, and asset development fund is for the development of its subsidiaries. Like the Reserve Bank Innovation Hub was made, so 100 crores RBI had to give for that. So this asset development fund is for that. Okay, so these are the risk provisions. So the risk provisions, they actually accumulate. It's not like that we are seeing the risk provisions of this year that is different from the previous year. So they accumulate slowly and slowly. So that's why this risk provisions that had to be maintained for this year, for the financial year 2023-24, was lesser because first of all the fluctuations reduced by a lot, as well as risk provisions accumulate. So we had to maintain lesser risk provisions because we maintained huge risk provisions in the previous year that actually were not used, because the loss actually didn't happen. So this is the complete idea. That's why the income is increased by good amount, but the expenditure decreased by a lot. That's why huge surplus was given by the Reserve Bank of India to the government of India. I hope this is clear. And in the contingent risk buffer, we have the capital, we have the reserve fund, we have the risk provisions. In the risk provisions, there is a contingent fund and there is the asset development fund that is used. Asset development fund is used for the development of the subsidiaries of the Reserve Bank of India, such as DICGC, RBIH and such. Okay, ARE is the total, and ARE is the money that is being kept for the contingent risk buffer. I hope this is clear. Yes. Next, foreign exchange reserve. So you do not have to remember the numbers here. I am again telling you, these numbers cannot be remembered. These numbers cannot be remembered. But the idea that I want to provide you is that the FCA, the foreign currency, in the foreign exchange reserves, the foreign currency accounts are being maintained at 12% nearly. And the highest in the foreign exchange reserves, we are maintaining the highest value of gold. That is nearly 16.53%. Like, so variation is this, okay? So here you can see that the highest we are maintaining is, the FCA, that is the foreign currency accounts. We are maintaining the highest of the foreign currency accounts in absolute terms, and then we are maintaining the gold. The highest variation has been seen in the gold has increased by 16.53%, while the FCA has increased by 12%, that you can understand. Okay, so this I hope is clear, that the highest FCA we are maintaining. The highest is the FCA that we are maintaining. After that is the gold reserves that we are maintaining. Okay. So this is the idea. I wanted to provide to you the idea that what we are maintaining the highest. So we are maintaining the highest of the foreign currency account in the foreign exchange reserves. Foreign currency assets that we maintain is in dollars, pound, sterling, and the yen, yuan, and the euro. The euro. Okay. So these 5 currencies we maintain in the foreign currency assets, and the foreign currency assets are the highest in number. And then the gold reserves. But if we talk about the variation that has happened is highest in the gold reserves, because they have increased in the value. So that is the idea. But we still maintain the foreign currency assets highest in the foreign exchange reserves, because these reserves have to be used for the imports and such. Understood? Yes. Variation. So like, I hope you are able to understand that this is variation, but still it is highest. It is highest now. So the variation is also highest. The FCA, like, it is being kept at the highest. Okay. Now answer writing. See, in the report, in the final annual report, there is the boxes, such boxes that are given. So using these boxes, you can understand that if a question comes that what are the enhancements that have happened in the digital payment terrain. So you can use this kind of things, that enhancements in the UPI to facilitate user access and convenience. So you can use the points that are given here. So the advancements that have happened in the UPI, so that is very well explained. The UPI 123 Pay, the UPI Lite. So they have been explained here, that slowly and slowly how the advancements have happened. So answer writing, you read editorials every day or every week, you are reading one editorial. So you can just open the annual report and you can just read these pink boxes to know more about the Reserve Bank of India, what the RBI has done. So every week you can use and you can read one box. That kind of habit you can take for coming 1-2 weeks. Okay, so try to read these pink box, because they are very well written in terms of the enhancements that have happened. Okay, so this is a homework question. I hope you will be easily able to answer this question. And here I have told you that the highest in the foreign exchange reserves, the highest is being kept by the highest part is of foreign currency assets and then the gold reserves, but the highest variation has been seen in percentage terms. You can see that the highest variation that has happened is in gold reserves because of the valuation of the gold reserves. Okay, so this is the complete idea that I wanted to provide to you. Any confusion? So yes, you can easily answer this question. And before ending the session, I want to show you if you go to edutap.co.in, if you go to the free material in the blog part, you can see that there are the blocks that are provided to you. So if you go to the exam information, if you want to get any exam information regarding the RBI Grade B, regarding the NABARD Grade A, so you can get the complete exam information. You can know more and more about the exam, as well as you can know more about the job profile, about the strategy that you have to adopt for the different components in the exam. If you want to know about the success stories and what strategy the people have adopted, you can use this also. Okay, and at the end of the page, you can see that you can join the Telegram channel where you will get the PDF. Okay, so now this is the homework question. I hope you will be easily able to answer this question. Tell me the answer of the homework question, as well as tell me how many marks you have got out of 20. And here, if you have not seen the complete session, first see the complete session where the in-depth analysis has happened. So this is it. And one more thing, that the data points that have been used in the question, they are the most important. I tried to bring all the data points that I have used, or the most important data points that I have used in the PPT for the complete session. So most of the data points that have been asked in the questions, they are directly important. Okay, so you can use that for your understanding. You are most welcome, everyone, and thank you for joining the session. There is a big announcement that EduTap has brought for you this comprehensive guidebook for RBI, NABARD and SEBI. So using this single guidebook, you can know more about the examination, the pattern, the syllabus of the examination, and you can download these guidebooks very easily. Okay, and they are absolutely free of cost. They are made for your saving your efforts and saving your time, so you can know more about this guidebook. Okay, so this is it from my side. I hope you have enjoyed this session. I tried to bring the important data points. I tried to bring the questions that are relevant and that you can use for your practice also. If you go through the Ronak, you can see the M1, M2, M3, M4 in. See, it is not important for the ESI M1, M2, M3, M4. The M2, M1, M2, M2, M3, M4, they are important for the SEBI. So you do not have to go through it. Simply M1 is, so they have different formulas. So M1 is the demand deposits, the currency with the public plus the other deposits. M2, M3, M4. So M3, that is actually the money supply that we use. It is the M1 plus the time deposits, or M2 plus the time deposits. So they have different formulas. You do not have to go through it, because this is important from the SEBI point of view and not from the RBI point of view. Okay, so this is the idea. I hope you have got to this point, and kindly drop me a mail, because like the formulas, I do not have it by heart, but I will be able to explain this in the mail better. Okay, so you can comment down below. I will try to explain it, but it is not important from the ESI or finance current affairs perspective. Okay, yes, so M3 only. M3 is the money supply. That is all. Okay, and you can comment down below. I will try to explain there. So this is it. Okay, so the PDF of the PPT will be uploaded in the Telegram channel. Now this is the analysis that has been provided by me. So I was making the PPT, but the team is working in the backend, and the team is trying to make the whole PDF that will be uploaded in the course by 20th June. So by 20th June, the PDF will be uploaded in the course. Okay, so I hope this is clear. Yes, so the PDF will be uploaded in the course by 20th June, by 20th of the June. So I hope you will read the whole PDF that will be uploaded by the team. But here, so this is the idea right now. Yes, so they will upload the PDF by 20th June in the course. In the miscellaneous report section, you will get the complete of the report. Okay, and this PPT was made by me, so I tried to provide you all the data points, so you can download the PPTs from the Telegram channel. Okay, and you can revise through it. Okay, any other confusion anyone has? Any other confusion anyone? No confusion? So can I close the session? So in the Telegram channel already the PDF has been uploaded for the PPTs. The PPTs that I have prepared, the PPTs have already been shared with you. The PPT have already been shared with you in the Telegram channel, and you get the PDFs by the in the next 24 hours. Okay. I hope this is clear. Any other confusion? No confusion? Okay. So Ronak, I hope this is also clear. The M3, that is M1, that is demand deposits, currency with public, and the other deposits plus the time deposits. So that is it. So I think this is also clear that what is M3? So that is money supply. That is how RBI calculates the money supply through the M3, that is M1 plus time deposits. M1 is demand deposits that we take on time, that we take whenever we want. So those are the demand deposits. Currency with public that we have in our hands, and the other deposits with the Reserve Bank of India, plus the time deposits, that is the fixed deposit and the recurring deposit. So I hope this is also clear. So no confusion, no more confusion. I'm not able to see there. So, okay. So no more confusion. You are most welcome, Suprabha. And how to retain all these data points, I have told you that how I was able to retain it by again and again seeing the same PPT, seeing the same PDF, going through the data points again and again. I remember that what is the remittances that are, as per the World Bank, the remittances are going to grow by 15.2%, and the headline inflation that has decreased to 5.4%. Okay, the core inflation has decreased to 4.3%. So that is like, if you go through the same page again and again, like 3-4 times, you will remember the data points. Okay, as well as make a chart yourself, like write it somewhere that for the global economy, you can make a chart like this, that for the global economy, these are the 5 data points that are important. The domestic economy, these are some of the data points that are important, and inflation divided in inflation, growth, trade, in such a way. Okay, you have to, like, for the retaining purposes, you have to go through it again and again. So this is it from my side. I hope you enjoyed the session. I hope your queries are also clear, and go through this complete session, because that is more important. Then only you can revise. Okay. So yes, thank you very much for joining this session, and I hope you enjoyed the session. Sectoral credit data, no, it is not very important. Okay. The yearly data are usually asked, not the quarterly or the monthly data. No, actually this PPT and the PPT is prepared by me. So this is only for the purpose of your YouTube, and you can get this in the Telegram channel. But the PDF for the course is being prepared by the team. So the team is preparing that with more, maybe they will provide you with a document of 30-40 pages, so that you are more prepared from the descriptive answer writing practice also, and all of that will be provided. The descriptive questions will be provided. So for the course, there is different PDF that is being prepared. So this is it from my side. Thank you very much for joining the session. I hope you enjoyed the session. Thank you for all of your